Hey guys, I hope you're having a great day. Last week we couldn't drop a video because I had a very busy weekend, but today I'm here and we're going to be taking a look at a few chart analysis. So we'll be starting with the DXY today. This is known as the Dollar Strength Index, and it's important because it measures the strength of the dollar. So last week was actually a very crazy week for currencies because the DXY was actually in a rampage, and we can see how the price action on DXY translates to the major currencies having the US dollar as either the quote or base currency. So in this week's analysis, I'm talking about price action, okay, and we're going to take a look at a few opportunities for this coming week. If you love the content, please smash the like button, subscribe, and follow us on Instagram. We've got lots of great content out there. So our academy is going to be launching very soon. So we're going to be creating series of courses to help you understand how the forex market works, okay, how to become a professional trader, or learn from my own experience on how I navigate through the markets, and just all that. So as we approach the launch date, I'm going to explain more on that, but meanwhile we're going to focus on chart analysis for the coming week. So this is DXY and this is a daily chart. Since the beginning of last year, so 2021, at this price level here, we've been in a massive bullish move. So the dollar has been so strong, and it translates to how the price moves across all major currency pairs. So I'm just going to go down to the lower time frame so we can see what happened last week, in order for us to kind of predict what's going to happen next week and determine great trade opportunities. So this seemed like a massive bullish flag, a bullish continuation pattern for me, okay. So I believe what a bullish flag means. It means there's a good chance that this bullish trend on the DXY is going to continue. That's if we get a bullish breakout above the flag. So this area here, so this green area here, is known as our area of value, okay. This is the area I'm watching out for, where we could get potential bounce on the DXY in order for us to go higher. So if we should break this green area of value here, we could see the DXY falling lower, and we could see how it affects other major currency pairs. So I'm going to show you all that in today's video. So as you can see here, this massive red dump here translates to what we can see on gold. So I'm going to go to gold. Let's quickly take a look at the 2 hours time frame on gold. So I'm going to zoom in, okay. I've not actually started the analysis on gold yet. I just want to illustrate something real quick. So you can see this is DXY. We had this massive, red candle, okay, series of red candles, this massive price decline here at the end of last week. And this actually translates to how, we got this price action on gold from this area of value. So this support level up to this level. So this happened as a result of weakness in the DXY. So when the DXY is weak, gold tends to be strong, okay. Same thing happens for EUR-USD. So when the DXY is weak, EUR-USD becomes strong. GBP USD also becomes strong. So we're going to see all this in this video. So this is just something I need you to understand, okay. When it comes to trading forex market or trading currencies, whatever happens to the DXY affects the major currency pairs and most of those commodities in a very massive way, okay. It also affects the indices too, because the indices is just a compilation of different stocks in the US stock market. So whatever happened to the DXY, whatever happened to the dollar, it affects assets across all major markets, forex markets, stock markets, cryptocurrency markets. That's why it's very important that we pay attention to the price action on DXY in order for us to accurately predict what's going to happen across major currency pairs or assets like gold or indices like NASDAQ. So that's just a quick overview of the DXY. So as we move on with the other analysis, we're going to move back and forth between the DXY and those currency pairs we'll be analyzing today. So moving on, I'm going to take a really quick look at gold. So you can see we had a massive move to the upside. So this decline, so from here down to this, this decline from up here down to this level was as a result of the interest rate hike last week. So the Feds, they increased interest rates, and this led to this massive bearish move to the support level. So we had the support level, and we had some job data from the United States. Last week Friday was NFP, non-farm payroll. So we had strong job reports, which shows that the dollar is actually strong, or the economy of the US is strong. But this also translates to the fact that inflation is also getting higher, okay. So this is the reason why we had weakness in the dollar, because strong job reports means the economy is strong, and right now the Feds are trying as much as possible to weaken the economy of the United States in order for them to be able to bring down inflation. So if you understand fundamentals, you understand that inflation is, bad for the economy, right? So if the economy is strong, it means people have more money to spend. It means inflation is probably going to head higher. Okay, so that's the reason why we saw this weakness in the dollar, and it translates to this massive move on gold. So that's just by the wayside when it comes to fundamentals. But I don't really pay attention to fundamentals too much, because everything that happens in fundamentals translates to what we see with technical analysis on the charts, and we can also take advantage of those price movements. So you can see when we came to this support level, we had a very good bounce. I'm just going to zoom in a little. You can see we had a doji. So this is a sign of a reversal pattern at a support level, which gave rise to this massive, bullish move. So this is also kind of like a bullish engulfing candle. So following technicals, you could have, you would have been able to take advantage of this price action from the, at the end of last week. So between Thursday and Friday. So that's when we had this massive price movement to the upside. So right now, what would I be watching out for in order for me to take advantage of this price movement? So remember, this is gold. I'm going to go down to the 4 hours time frame. We are still in a massive bearish trend on gold. Okay, price creating a series of lower highs and lower lows. So what this means is that we are likely going to see more price declines. Okay, because if you look at the DXY, this is forming some sort of bullish flag, so a bullish continuation pattern. So if we should bounce off this area of value and head higher, there's a good chance gold will come into this area of value and head lower. Okay, so this is just anticipation, but we are not going to carry our trade based on speculation, or based on assumption. So we're going to wait to see what the market does before we actually take trades. So what I'm going to be watching out for in order for me to go short on gold in line with the trend is I'm going to wait for price to come into this area of value, get some sort of reversal pattern, or like a candlestick reversal pattern, or a chart pattern like head and shoulders, for me to go short in line with the direction of the trend. So I'm just going to illustrate real quick. So we might get something like this, price slowly coming into this area of value, get some sort of reversal, then dump. So this might give us some sort of support level for us to trade a breakout off of this area of value. So we might get something like this. Okay, so we might get something like this in order for us to go short in the direction of the trend. Okay, so if I get something like this, then I'm going to go short. Okay, so it doesn't have to be exactly like this, but this is just an illustration to what I'm watching out for in order for me to go short. And there's a good chance we might just come in like this, and reverse to the downside. So remember how it works with support and resistance levels. If we have price moving so fast into an area of value, there's a good chance price will move so fast in the opposite direction. But if we have a slow build up to an area of value, there's a good chance we are going to break above. But that being said, there's a good chance we are going to break above like this or so, retest and go higher. So if this happens, so a breakout, a retest, then I'm going to think about going higher on gold or going long on gold, as the case may be. But remember, even if we break above that area of value, there's something that might still hold us or prevent us from going higher. So this is another area of value here. So this is a resistance level. So even if we break through this area of value, we have this area to also battle with before we can aim for higher targets. But I would be careful trying to long gold right now, because the DXY is still very bullish. Okay, the DXY is still very bullish. Looking at the overall picture of the market, so zooming out, the DXY is still bullish, not until we break this area of value to go lower, signifying that there's probably going to be a change in the trend of the DXY. We stay the course, okay, and the course is being bullish. So the DXY, there's a good chance we're going to be bullish, which would translate to some more bearish pressure on gold. So this is basically my outlook on gold. I'm just going to wait for price to come into this area of value, get some sort of bearish reversal candlestick or chart pattern, a breakout for me to go short, targeting this bottom of this range here. And if we should break above here, I'm going to aim for this level. So if I get a good opportunity to go long, so something like this, yeah, so if we get some sort of breakout, consolidation, and then another breakout like this, then I'm going to go long, targeting these levels. So if you pull out the price range 2, you see this will give you approximately 250 pips, which is not bad. Okay, not bad. But if we get the opposite, so if we should get something like this, price going to this area of value, get that reversal chart pattern, a breakout, or a reversal candlestick pattern, which gives us an opportunity to go short from here, then I'm going to target this support level, which would translate to having approximately 600 pips move on gold. So that's something I'm going to watch out. So this is how I'm going to play gold right now. So I'm not going to jump into any trade, because this massive bullish move signifies that we might get the same reversal to the downside because of the way the build up to this area of value. Okay, there's a good chance we're going to break, but whichever the case may be, this is what I'm going to watch out for before going long or short for gold. So moving on, I'm going to talk about EUR-USD real quick. So this EUR-USD, something very important to notice, that if you take a look at the price action on EUR-USD, you would notice something really interesting. So I'm going to use the parallel to, if you pick this, you see this is kind of like a bearish, this is kind of like a bearish continuation pattern. Okay, so like a bearish flag. So if you take a look at the DXY, this is a bullish flag. For EUR-USD, this is a bearish flag. So it is flowing in line with the strength of the dollar, because at this moment, with the current macroeconomic downturn across the globe, the DXY is the king of the forex market. Okay, the DXY, or the dollar, controls the forex market. Everyone wants the dollar because it holds so much strength. So whatever you see happening in the DXY, you can see the opposite happening across the major currency pair. So in this case, you can see a bearish continuation pattern, because we've been in a bearish trend, because the dollar has been in a bullish trend. So the reason why EUR-USD is in a bearish trend is because the dollar is the quote currency in EUR-USD currency pair. So for currency pairs having the dollar as a base currency, they tends to go in line with the direction of the strength of the dollar. Okay, so you can see that in USD JPY. I'm going to show you that real quick. Okay, when we get to USD JPY. But so for now, EUR-USD, GBP USD, gold, which is XAU-UXD, they all move in the opposite direction of the dollar. So the EUR-USD moves to the downside, while gold moves to the upside. While the DXY moves to the upside. So you can see the build up on the DXY shows us that we are creating some sort of bullish continuation pattern in the direction of the trend, while EUR-USD shows us that we're creating a bearish continuation pattern in the direction of the trend, because USD is the quote currency in EUR-USD. So that's why we have this bearish continuation pattern. So this is 6 hours chart. I'm going to go down to the 2 hours chart to see where we could see potential levels for us to go short or long. But right now, for EUR-USD, I'm more inclined to look for opportunities to go short rather than look for opportunities to go long, because we are clearly still in a bearish trend. Even if this bearish continuation pattern right now looks bullish, but the overall trend is bearish. Okay, so on the higher time frame, 4 hours time frame, for example, it is bearish. So the higher time frame, the trend on the higher time frame takes preeminence over the trend or the market structure on the lower time frame. Okay, so if you take a look at what happened here, you see what we have right now is similar to the price action we've seen in the past. Okay, so this is similar to what we're having now. So this is a bearish continuation chart pattern. Okay, so this is like a bearish flag. So you have a massive bearish move, consolidation move. So we have a bearish move, consolidation, potential break to the downside. So this is only confirmed if we get a bearish breakout from this bearish continuation pattern or bearish flag. Okay, so my point is that when you see something like this happen over and over again in the past, it is likely going to repeat itself. Okay, not in the exact way it did before, but in a similar pattern. So this is what price action is all about, using past price movements as a case study to make future price prediction. So that's price action. So you can see we had a massive bearish move, consolidation in form of a bearish flag, a break to the downside, massive bearish move, consolidation in form of a bearish flag, break to the downside. Now we're having a massive bearish move, consolidation in form of a bearish continuation pattern or bearish flag. Then we could see a potential break to the downside. So if this channel breaks to the downside, then we might see some really nice massive moves. But right now we are currently at the middle of this channel, okay, middle of the bearish continuation pattern. So what do we do? So personally, I'm going to wait for this area of value, okay. So this is something I would be watching out for. So there's a good chance we might come into this area of value, okay. So there's a good chance. So you can see we had a double top here, which gave rise to this massive bearish move. So there's a good chance we might see some sort of consolidation like this. So a gradual consolidation into this area of value before dumping hard to the downside. So if this plays out, I'm just going to be patient enough to wait for a reversal pattern at this area of value to go short. But there's a good chance this might not work out, okay. But either way, I wouldn't be going long or short right now because we are clearly at the middle of this channel, okay. We are at the middle of this bearish continuation pattern. So this is kind of like a no man's land. So there's nothing really interesting here. So where should we go short or long? Because there's a good chance price will just come back down. There's a good chance price will go up. So the best thing to do right now on EUR-USD is, staying patient to wait for price to get to good area of values before considering going short or long. So price could slowly creep upwards up to this level, okay, then give us a bearish reversal candlestick pattern or a bearish chart pattern, whichever the case may be. Then that will be our scenario to go short in the direction of the trend, okay. Now this is what I'll be watching out for. So if we break above this area of value, I would be patient enough to wait for some sort of breakout, a retest, then move to the upside, or I'm going to wait for a breakout, a consolidation, and a break above the consolidation for me to go higher. So this the only scenario where I would think about going long when it comes to EUR-USD, okay. But personally, I don't think this is going to happen anytime soon, except the dollar gets a very big bang to the downside. I wouldn't assume, but it's likely not going to happen, okay. But it might. But we just have to see what the market does in order for us to trade accordingly. But the most likely scenario right now for EUR-USD is something like this: price slowly creeping to this area of value and then tanking to the downside. We might not even get price going to that area of value. So I'm going to show you something. So we might see a slow grind, okay. We might see something like this, then price stops at this level, then bam. But either way, we just have to wait for that reversal chart pattern to occur before we go short. If you want to be extra careful, okay, so if you don't want to take the risk of trading within this channel, you could simply wait for price to break below, okay. So you could wait for price to carry out whatever it wants to do within this channel, and when it breaks this channel, you wait for a consolidation down to the downside. So this is what you could also wait for now for you to go short on EUR-USD. But I think this is going to take a while to play out, maybe a month, 2 weeks, or 3 weeks. But for now, I wouldn't be jumping into a trade on EUR-USD. I'm going to wait for price to get into this area of value before I look for an opportunity to go short. That's if we do get here. Or alternatively, I'm going to wait for market or for price action to play out, give us that sign of a reversal or a bearish continuation pattern within this channel, then I'm going to go short. So hopefully, as the week goes on, if I see anything interesting or any changes to this chart on EUR-USD, I'm going to share with you guys on our YouTube channel. So try to subscribe, hit the like button, and follow us, turn on the notification, so whenever I put out new content, you get alerted and you can take advantage of those content. So moving on, I'm going to talk about GBP USD real quick. So GBP USD is similar to EUR-USD. You can see we have a trend here, multiple price reversals, 1, 2, 3, and it seems like we had a break from this support level. So I'm going to go down to the 2 hours time frame, okay. So we had price hitting our trend line, long-term trend line, with a good reversal. So all I'm going to do is I'm going to watch out for something like this, a consolidation like this, and an opportunity to go short for me to trade in line with the trend. So remember, all this will only be possible if the dollar stays strong, okay. So remember, the GBP USD is similar to EUR-USD. It has the US dollar as the quote currency. That means if the DXY continues to stay bullish, maybe bouncing off this area of value and going higher, then you would likely see GBP USD giving us this sort of bearish continuation pattern and a break to the downside for us to trade in line with the bearish trend. So that's all I have on GBP USD. Nothing much unlike EUR-USD. So right now we've had this rising wedge, which translates to a bearish continuation pattern. We've had our breakout, and now we have price coming for a retest. But I think we are likely going to see this consolidation and a break of this consolidation to the downside. So remember, this doesn't have to happen exactly like this, okay? It might simply just be a small consolidation like this and a breakout, but you get the point. The point is to tell us that this bearish move is going to continue. That's the idea behind consolidations. Struggle between bulls and bears, to try as much as possible to determine where the price or the market is going to head next. So if we do get a consolidation here and a bearish breakout, then that's our confirmation that this bearish move is going to continue to the downside, and our target is just going to be at these lows here. So this is what I'm going to watch out for to trade GBP USD. I'm not going to go long on GBP USD no matter what happens, okay? So if we just get price moving higher like this, I'm just going to chill, stay away from the market, and forget about GBP USD. But if we get something like this, this would be a very good scenario for me to go short. This is what I'll be watching out for to go short on GBP USD, nothing more. If we creep slowly to the upside, I'm just going to let the trade go. I'm not going to stress myself to take advantage of GBP USD. But if we get a bearish consolidation like this and a bearish breakout, then I'm going to go short in line with the direction of the trend. So moving on, USD JPY, real quick, very interesting. 2 weeks ago I talked about price coming back to this area of value. As at that time we were around these highs here, and you see we had a massive flush to the downside, and we had price tapping into this area of value, giving us this massive pump to this area of value. Okay, so this is a resistance level. So what I'll be watching out for on USD, okay, to just put into perspective, USD JPY has been in a massive bullish trend like the DXY. So remember I said the dollar is the king of the forex market right now, and for USD JPY the dollar is the base currency. So that's why you can see for a currency having a dollar as a base currency, it has a bullish move in line with a bullish move on the DXY, okay, because the dollar is in total control. So USD JPY, I'm going to go down to where we have current price action. So what I'm going to watch out for right now is I'm going to play the range between this resistance level and the support level, which is our area of value. So I'm just going to do this, excuse me. So I'm just going to play this range, okay, this range till we eventually get a breakout. So when we come to this area of value, I'm going to go long. When we come to this resistance level, I'm going to go short. That's how I'm going to, it's risky, but that's how I'm going to play USD JPY. So I'm going to wait for, of course, I'm not just going to jump into a buy trade when we come here. I'm going to wait for some sort of candlestick reversal pattern, like a bullish engulfing candle, a doji, a spiny top, and hanging man or so. So for me to, and hammer for me to go long if we come into this area of value. So something like this. I'm going to wait for price to come into this area of value. Then I'm going to look for an opportunity to go long and target these highs here. So if I go long at this area of value, my stop loss is going to be at around these lows. So my stop loss is going to be around these price levels, okay, below the area of value. That will translate to approximately 70 pips. So let's say 150 pips stop loss, targeting these highs of 350 pips price target or 400 pips price target. So that's a good risk to reward ratio for me. And if we come into this area of resistance, area of value, I'm going to wait for a bearish reversal candlestick pattern, chart pattern, for me to go short targeting this level. So I'm just going to play this range till we eventually get a breakout, and I'm going to trade in line with the breakout. But there's a good chance we are going to get a breakout from this resistance level, because this is a bullish trend and the Japanese yen is weak and the dollar is strong. So it's just a no-brainer. So if we come into this area of value, there's a good chance this is going to be a solid buy level. But if you come here, I'm just going to be patient enough to see, because it's a good chance we break the resistance level at the next try, because we've had 1-2 tries now. So on the next try, it's a good chance we break the resistance level, and I'm just going to go long after the breakout. So I'm going to wait for a breakout, a retest, go long, or alternatively I'm going to wait for a breakout, a consolidation, and a break of that consolidation to go long. So that's how I'm going to play USD JPY. So moving on, NASDAQ, similar to USD JPY, but we have been in a bearish trend. So remember, this is an indices, and if the dollar is strong, indices tends to be weak, and if the dollar is weak, indices tends to be strong. So that's how you follow fundamentals with indices. So what I'm going to watch out for right now, we don't have a clear support level, but we know this is the current lows on NASDAQ. So I'm just going to wait for price to probably come into this area of value and look for an opportunity to go short in line with the direction of the trend. But price consolidating around these levels is just going to be it's going to be too risky for me to go short, except maybe we get something like this. So if we get something like this, so let's say we get a consolidation like this, okay, consolidation like this and a break, then this would be a good opportunity to go short. Okay, so something like this would be a good opportunity to go short, targeting these lows or price levels way below these lows. But you'll be better off waiting for price to get into this area of value before you go short, because this will give you a better risk to reward ratio, because you can easily set your stop loss above the area of value and target the lows. But right now, if you take a breakout here, you tend to get a wider stop loss above the highs of those consolidations. So this is how I'm going to play NASDAQ. Lastly, we're going to talk about crude oil. So crude oil has been in this bullish trend. Okay, this is daily chart on crude oil, and over here we've been declining. Okay, we've had series of price declines since June of this year, June 2020. We had series of price declines. I'm going to go down to the lower time frame. So before I go down to the lower time frame, you can see we had 1, 2, 3, 4, 5 price rejections of this trend, and this is the most recent price rejection. So I think there's a good chance we might be heading higher. So I'm going to go down to the 2 hours time frame so I can show you exactly what I'm looking at. So this is clearly okay. So this is like a symmetrical triangle. So we've had 1, 2 price rejection from the top, and we have 1, 2, so multiple price rejection from the bottom. So this is kind of like a symmetrical triangle with a bullish breakout. Okay, so if we intend to head higher, so if the price action suggests we might be heading higher, I'm just going to follow accordingly by watching out for something like this. So I'm going to watch out for some movement like this. Okay, so this is a bullish consolidation and a bullish breakout. So I'm going to go long on a break of this bullish consolidation or bullish continuation pattern. So this is known as a bullish flag. So it could be a bullish flag, it could be a triangle, it could be a rectangle, it could be anything, but anything is signifying that we are going higher. So a consolidation and a bullish breaker from that consolidation is what I'll be watching out for to go long on crude oil in the direction of this new trend. So we have this low, we have higher lows, we have these highs. So at the break of this consolidation, that will probably give us a high higher than this high. So a higher high, which would signify a potential break in market structure. And we're just going to go on by following up this price target. So we're going to target this price level first, then we go for the higher highs. So even if we get something like this, so a price movement from here to this level would be approximately 350 pips, not bad, and to this level would be around 700 or 800 pips. So that is how I'm going to play crude oil. So for now, I'm just going to lean towards the bullish scenario for crude oil. But something else that could happen is this. I'm just going to show you something real quick. So this is a resistance level, right? So this could happen. So we might get price consolidating around this level and falling down, okay, because this is also a resistance level. So if there's no solid strength high enough to create some sort of bullish momentum to break out this area of value, this resistance level, then we might see price heading downwards. But I think there's a good chance we're going to head higher because there's a ton of shortage in supply with crude oil globally, okay, with the old sanctions on Russia and all that. So there's a good chance we are going to head higher. But in order for us to take advantage of that price action, technically I'm going to wait for a bullish continuation pattern before I go long on crude oil. So this is all I have for this week. I hope I did well enough to show you what I'll be watching this week. If you love the content, hit the like button, subscribe, turn on the bell notification so you get notified whenever I put up content. So I make videos like this every Sunday and I send them out for free. In the comment sections, guys, share your thoughts. Let us know what chart you want me to analyze next week, and I will try as much as possible to include that in the next list of charts I'll be reviewing for the week ahead.